Yeah, and by the way, I'm quite happy to talk about performance as well in due course, but this is not a good move in our view because what he offers and what we offer are two totally different things. And yeah, I've referred to this as a mismatch. It really is. He couldn't be at the polar opposite end of the investment spectrum to us. Yeah, we look at game changers, tomorrow's world, businesses that are shaping the future, generally small cap businesses, tech disruptors, etc. You take those positions for 3, 5, 10 years, you get into those businesses for long-term returns. That's what shareholders are in with us for. What he offers, he's a discount surfer. He is trading discounts. He wants to mush these things together, create a fund of funds. He wants to liquidate the portfolio pretty quickly. He's talked about substantial liquidation immediately, and that concerns me in terms of the balance of the portfolio. So look, you know, our shareholders have signed up for Edinburgh Worldwide because we are unique, because of what we do, because of the portfolio that we've built. Yeah. And to have that taken away from them and then have their money taken and plonked into this very different strategy, to me, does not feel right.
What are those shareholders saying to you? Because and your big case for the defence there is about timescales. This is about you incubate these companies over a period of time. The second point you're making, I think very clearly, is that the holders of the investment trust know exactly what they're signing up for. They know it, and you mentioned timeframes there. This isn't necessarily a 1 or 2 year deal. This is 3, 5, 7, 10 year deal as well. So it does take time as well. So that's the case for the defence, isn't it? That it's about timescales and actually about bringing on these forward gems. What are the investment trust holders saying to you?
Look, firstly, they're saying they really like the strategy. Yeah. So they are quite happy to be in for the long haul. They love the fact that we're investing in these different businesses that they wouldn't typically get access to. Some of our private holdings, if you take a PsiQuantum, you can't just go onto the market and buy into PsiQuantum. If you want into a business like that, you have to come into a product like Edinburgh Worldwide. However, they are holding me to account, and in turn I'm holding Baillie Gifford to account for performance, because whilst they love that view, that long-term view, they want us to be good, really good at what we do, and that's what we're focusing on. And Steve, that's why last year was a really important year of introspection for us. When I took the chair role on at the start of 2024, it was, you know, with the backdrop of 2 years of more difficult performance, difficult years for growth investing, difficult years for Edinburgh Worldwide, and that's not where our shareholders wanted to be, and that's not where I wanted Edinburgh Worldwide to be. I too am a shareholder, by the way, and so for us, it was really important to take action, to take decisive action, to say, look, we want to deliver for the long term for our shareholders. We put those changes in place. We announced them in November. We've implemented them. We've seen early fruits of that. So in the last 4 months of last year, our net asset value is up 15%. So I'm delighted that we've started to turn the corner.
Jonathan,
but there's further to go.
Just on that note, you talk about how patient your investors are. Yeah. It feels like we're in a market of extreme impatience, and we saw some of that tantrum really play out yesterday. Is it a case of any publicity is good publicity for your investment trusts and now truly in the spotlight, where they might have been somewhat in the shadow previously?
Yeah, and look, not all of our shareholders have been patient. So in the whole reason the discounts opened up 2 or 3 years ago is because people wanted out, and you know supply, you know, comfortably outweighed demand. So they haven't they had a period of impatience. But yeah, for us, part of the reason why we are particularly focused on giving back 130 million of capital to shareholders is because we don't want anyone to feel trapped in Edinburgh Worldwide. If they like the strategy and they're willing to sort of invest in that long term, then this is a great place for them to be. If they don't want to be here, then we've offered a route out to them. And again, I think it's so important, you know, for shareholders to speak here. It's really, really important for shareholders to speak. If people want products like Edinburgh Worldwide to stay around, they have to vote.